Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here. I'm John Sneisen, and as Zero Hedge reports, Contagion, Home Capital Bank run spreads to another Canadian mortgage lender, and I'm going to go quickly into part of this article and then we will remark on it and talk about what's next. So, starting it off, as the article says, as discussed first thing this morning, the fate of Canada's largest alternative mortgage lender, Home Capital Group, appears to have been decided over the weekend, when in the span of just 1 week, over 70% of the company's deposit base had been withdrawn, effectively mothballing the business, leaving just a sale or liquidation as the two possible outcomes, even as a $2 billion emergency line of credit keeps the company afloat, at least until HCG's $12.8 billion in GICS mature sometime over the next 30 to 60 days. Predictably, the news of the ongoing bank run once again spooked shareholders, who sent its stock sliding by 10% and wiping out 2/3 of the company's market cap in under 2 weeks. A bigger red flag emerged when concerns about possible contagion appeared to have been justified. Canada's Equitable Group, another alternative mortgage lender, said Monday it had started seeing an elevated but manageable decrease in deposit balances, traditionally a polite way by management to admit a bank jog is taking place. The company said that customers had withdrawn an average of $75 million each day between Wednesday and Friday, and while the withdrawals so far are modest and represented 2.4% of the total deposit base, the recent HCG case study showed how quickly such a bank run could escalate. And while liquid assets remained at roughly $1 billion after the outflows, the company also announced that it had taken out its own $2 billion credit line with a group of Canadian banks, just in case the bank run was only getting started. All right, so we are going to go deeper into this. John, we recently talked about this just last week. It is continuing to explode as expected, as we've talked about for so long. Now, what has caused this to happen exactly, and what is this going to lead to in the long run?
Well, the scare here is, of course, the subprime mortgages that is a part of who they've been borrowing to, Home Capital Group and this Equitable Group. They are, of course, they say alternative lenders. What they are, they're subprime lenders. So what it means is that it's a higher risk of default in those mortgages. And we know way too well what happened with subprime lenders, like New Horizon in the United States. So what we're seeing right now is just the preemptive tremors that we're seeing right now in the before the big earthquake comes. Of course, people have been pulling out their deposits. This is not exactly like a Canadian bank. A Canadian bank has what's called a zero reserve policy. So they don't even need to care about having any money from investors on deposits to be able to borrow money out. Well, it's a little bit different with these guys. They run probably on a fraction of reserve basis, where they have about 9 times more they could borrow out of the deposits. Now the problem is when all the deposits are disappearing, that is their business plan, and when your whole business disappears, there's nothing more left to be able to borrow money. And then, of course, what we're seeing with Toronto and Vancouver, like these high-risk lending markets, what's going to happen here in Canada is, of course, what should have happened in 2008 when the United States went like this. Canada just continued up like this in mortgage debt increases and other debt. So what we're seeing right now is just the tremors that are happening before the big earthquake is going to come to Canada. It will come very soon. Of course, you will see Bank of Canada trying to bail out. That's what I think we're going to see. And of course, what people do forget, in 2008, Canadian banks were bailed out. And it's coming out in my new book that I'm writing, Canada, the Greatest Economy in the World, ? I think what we're going to see here is a full-scale blown real estate panic burst, because there's no other way this can unfold other than bankruptcies. I don't see anywhere else. And of course, with the stupidity of people, I don't know how stupid people are, but when BMO says that 95% of their mortgages in a collateralized debt obligation or mortgage-backed security that they're now putting forward to investors have a AAA rating, the same as a country which could print money, but the people that have these mortgages, unless they're countries, I don't know, how are they going to be able to print their way out of failure? So I guess they think that they're going to be bailed out no matter what. I think this crisis that are coming is going to be so big that there's going to be no central bank that's going to be able to save the economy.
And I always put in quotations, save the economy, because in the long run, it just adds to the fire.
Course,
you know, it's like throwing kerosene on a fire. But just finishing this off quickly, John, as obviously we talk about quite often, this is in our opinion, this isn't sound legal advice, because if it were, we could actually get arrested for that, because we have ridiculous laws like in any other place.
Well, and unfortunately, the securities have such a stranglehold on the industries here that, of course, I have friends that want to speak out about things, but they'll lose their license if they speak out about it.
You have to basically toe the propaganda line of the state and of the system. So, but going into that just quickly, John, what would you say to people as a solution to this issue? Get themselves away from this issue and be able to possibly avoid really losing their house, seeing horrible things happen.
I see a way bigger problem. There's so much more to this story than just this mortgage lending business. We're seeing a debt bubble here in Canada. And the problem is when you have debt, you're going to be in so much trouble during this next bubble that's going to pop, because when any debt bubble cycle pops, the whole economy will tank. You have a depression, and that's a natural outcome of it. And that's what we see are coming down the line here. No matter how much money the Canadian government is going to print to try to save the economy, it's not going to work. We're going to see higher inflation. I think we're first going to see deflationary state with this, of course, the first tremors here was just a minor deflation, but then we're going to see the big deflation when the major defaults are coming. There's people out there that have criticized us and said that, oh, Canada is the most solid banking in the world. And that's the reason why I wrote my book about this. And it was actually an article saying that, is Canada next Switzerland? Saying that, we're as strong as Switzerland. Well, look at where Switzerland is now in negative interest rate territory, and their Swiss franc is completely demolished in value, while their depositors are having to pay to have money in the banks.
I remember debating people back in like 2009, 2010 on Switzerland. People who claimed, look, this is an example of how you're wrong about central planning and socialism and all this kind of stuff. This is why you're wrong. And I'd just be going, well, look at the long term, not just the present.
No,
this is going to explode. No one wants to look ahead. But just finishing it off, I just want to point out that, this is bound to happen when it comes to centrally planned monetary systems, centrally planned markets where everything's manipulated to death. Eventually, it's all going to come crashing down. That is basically the end result of this, always, inevitably. And of course, as we talk about so often, fiat currency will always revert to its intrinsic value of zero.
Here's just a quick scope of history for you. When you borrow too much money, at one point you're not going to have enough money to be able to pay that back, and that's when the whole economy tanks. It's game over.
And with Canada having bail-in measures in their budget, that's also a huge concern, because people's bank accounts can literally be emptied for the sake of paying off debts based on really stupid investments.
This is really worrying me, because this whole home capital group thing is, as I said, the tremors of what could then be a massive contagion into the banking system. And as a fun fact from my book, there's the Canada Deposit and Insurance Corporation, which is supposed to insure everything under 100,000. They only have 0.79% of that insured. Yeah. So if one major bank like RBC, for example, goes down, there's going to be so high bail-ins. And of course, it's hard to calculate that number, but I would say you're so much more secure being out of the banking system than trying to, of course, be there, trying to play the game, having your pensions and everything. I think this whole system is going to come down so badly. I'm so worried about it. Actually, I'm not even worried about it. I know it's going to happen. So that's why I'm so worried about it for every Canadian out there. Not just Canadian. This is going to be contagion into the whole economy again. And we have so many of them. There's not just Canada. There's Australia. There's Norway. there's Italy, there's
Greece and Greece, Venezuela is pretty much at their end result.
Well, that's what you're seeing. It's just dependency on governments printing too much money and not being able to ever pay back, and everybody else thinking that that's a good idea and going into so much debt.
Yeah, and I mean, finishing it off is, as we say, fundamentals are off the table, so you can't put a date on things. So I know a lot of people are going to go, oh, people have been saying this for years. It's the inevitable end of this kind of market intervention and monetary intervention.
Can't keep on going forever. That's the rule.
Always.
Yeah. So
well, this is really important for people to focus on so they can insure themselves and their families in the inevitable case of this crash. And it's going to be on a massive scale because it's been pushed off so much that it'll come down that much harder. It needs to come down, however, for us to start from scratch. I mean, we can look towards a debt jubilee, but I don't think that's going to happen. The fact is, we are going to hit that peak where it's all going to come crashing down. And the sooner, the better, because the more it's pushed off, the harder it's going to come down.
There's either two things. There's either a debt jubilee or hyperinflation.
Yeah.
Both of them are the same because you're destroying debt with both of them.
Well, absolutely. Well, thanks, John, for going into this, and we will be back at you with much more. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are demonetized and censored to such a vast extent by YouTube and other social medias. Also, check our address for Bitcoin in the description and the comments, as well as on the screen for you to scan, if you please. And, of course, check our link for the Red Pill Expo, where you could see people like J. Edward Griffin, Robert Kiyosaki, Lord Moncton, James Corbett, Richard Gage, Cynthia McKinney, Mike Adams, Ty Bollinger, and so many other great people, John Rappaport. So many people are going to be attending this. Early bird ticket prices go until the 6th of May. You're going to want to get them as cheap as possible, and we hope to see you there in June in Montana. But until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change.
Bye.